the same property that we're talking about, Cheerful Brook, okay, purchased right around $150,000. For many of you, you can get a loan for $150,000, right around 4%, maybe even better, very little down. And your principal and interest on that property is going to be in the $700 range, okay? Now, everything included, depending on, the taxes in a specific neighborhood, HOAs, this and that, everything included, you're in the $900 range for a $150,000 purchase with 3.5% down. And you can get, in this particular property, I pulled comparables. A recent comparable is leased out on this particular property at $1,250 a month, okay? So do the math. $950 is your mortgage, $1,250 is what it would lease for and bring you an income, okay? That's a big deal. That means that you're at around 76% of what you're bringing in on the property. Your debt service is around 24% below what you can actually make on it. So it's a good spread. And the benefit of that is, some other thoughts on this. Many of you, out of weariness, back away from the market. And I want to tell you how this can affect you, okay? Now, one thing this is my opinion and my prediction, is that 2 years from now, I don't believe mortgage rates look like they do today, especially as we get further down the road of how I believe the Fed will fight inflation. They're going to push interest rates up. Now, interest rates going up will cost you a lot more than market appreciation if you're planning on the long term. Now, here's what I mean. Some of you are irate that 4 months ago, the same home that you were trying to buy went from 150 to 160, okay? Now, you're trying to get your head around making this offer even higher than you did when you're trying to buy the same home and you were beat at 150. Now it's jumped to 160, 165, and sometimes you're toiling over getting the property at the right price. Now, one thing to understand is when you're trying to catch a train, you kind of got to get faster than the train. So plan that into your offer strategy, number one. But number two, on the long term, understand this. If interest rates go from 4% on your loan to 5.875%, they just jump from 4 to 5.8, okay? 5.8%, we've seen those before, not a huge interest rate. Do you realize that the difference in payment on a $150,000 loan, just the change in interest rate cost you $60,000 more to pay it off? So, with that in mind, you're always looking at two indicators. Most of the time, all we're doing as buyers is worrying about the price today. But in a long-term strategy, that is not the only thing you need to be concerned with. Watch the interest rate. Now, what does the future of the market bring for us? I get questions from investors all the time. So I appropriately left this to the end. Let me tell you what's coming to the market, okay? Vegas is a distressed market. There's a belief that there's 75, 80,000 homes in some form of default, okay? So that means payments being missed, things of that nature. Whether those will ever be cured or not, that's a different story, but there's obviously a lot of things in the background. Well, let me tell you this. In November of 2012, which is the last month that I have data for currently, for notices of default, that's foreclosure notices going out, there were as many filings in November. There was 1,105 filings, by the way. That was as many, it represents as many as there were in the first 4 months of 2012. Isn't that incredible? So the first 4 months, it took us from January, February, all the way to April to equal that kind of volume. Notices of sale, okay? Now there's the first notice is notice of default. Foreclosure is basically paperwork has gone out saying foreclosure's on the way. 30 days before a sale date, we have so many notices that go out. And we had approximately 1,000 go out in November, okay? Notices of sale, way low, okay? Beginning of the year, we had a lot more notices of sale. In actual sales at trustee, still very low. So investors, what you need to know about supply is there are no radical indicators that supply is changing, okay? This is the same thing for any buyer. You need to know, well, Jared's telling us that we really should be watching what is happening through foreclosure because Vegas is a distressed market. I mean, we've been called that for a long time. Now, we can stand behind a recovery headline all we want and pretend like everything is rosy, or we can look at the facts. And it's kind of like being in the grocery store and saying, okay, we put cones around the mess, so we're all safe. No, there's still a mess on the floor and it needs to be swept up. So with regards to that, understand that there is no radical change right now. The only thing that we're seeing tick up a little bit in the past 3, 4, and 5 months is notice of defaults. Okay? Now, notice of defaults, while they are higher, much higher than early 12, they're not, near on a pace of what we've seen with the size of the problems we have. But stay tuned on that, because we have state Congress getting back together. There's been a lot of back-end chatter that AB 284, the people that crafted it and the people that actually manage that situation are absolutely earnest in getting it fixed or getting it to where it's workable. And we'll see what that means for our market in 2013. But as of right now, steady trend, upward pricing. I believe more of you that own your home, that have owned it for a long time, are going to make decisions to sell. You are going to say, well, my home is too big. Jared's telling me I can get top dollar right now compared to years gone by. And now is a move up, move down market that we've been waiting for a long time. And if that's you, 496-5000, be more than happy to give you an idea of what you can expect to walk away with an offer that's at top dollar. Speaking, coaching, investment advice, one-on-one consultation, list your home. info@horizonreg.com or click below. Think big and get after it. See you later.